Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, March 24th, 2020, and we are again in the final hour of the trading day. I mention this each day, but in my opinion, the most valid time to make your buying and selling decisions is at the end of the day, right before the market closes. During the day, you have the algorithms, you have the day traders, they're controlling the prices. I consider it mainly noise. At the end of the day, you have the large financial institutions come into the market. They take control away of the price from the day traders and the algorithm, and they move it to what, in my opinion, is the most valid price of the day. They have the best technology. They're dealing with the most money. They have the smartest people. And so I like to make my buying and selling decisions based upon what they are doing right before the close. So anyway, thank you all for coming today. I always appreciate it. I always look forward to seeing everyone. I think we have such a great group, so many good comments, so many good thoughts, and smart people in this group. So thank you so much for coming. I really do appreciate it. So we're having a great day, fantastic day. I don't want to undersell it. Dow is up 1,750 points, up about 9% today. The NASDAQ is up 466 points, up 6.78, and the S&P is up 175 points, up 7.83%. So this has got to be the norm recently, with up and down days of 1,000, 1,500, 1,700, 2,000. It's incredible. It's incredible. I've been trading for 24 years. I've never seen anything like it. But just glad on the right side of it today, because it has been pretty tough sledding over this last month with the market, as I'm sure you are aware. So anyway, hey, Dan is here. Good to see you, Dan. Thank you so much for coming. Mika25, hey, good to see you. We had a great call last night. It was his first lesson, so I hope you enjoyed that. I think you did really, really well. Christopher is here. Hi, Chris. Good to see you, sir. Hope you're having a nice evening in the UK. Zach is here. Hey, buddy. Good to see you, Zach. I got your email, and yes, let's get that set up. We'll do some option talks, right? And Joe Turner, hello, my friend. Good to see you, Joe. Posted your poems earlier today in Twitter, the last two, so always look forward to those poems. Frank, good to see you. Greetings to Greg in the group. Good to see you, Frank. Thank you so much for coming, and thank you for your poems as always. Kamal, hello, sir. Nice to have Kamal here. Hope you're doing well. Marco, hey, good to see you, Marco. Appreciate you coming. Hope you're having a nice evening in Slovenia. Always great to have you here. March Madness is true, Frank. It is. Hey, Brian, good to see you, Brian. Appreciate you being here. Hope everything is going well with your business. I can't remember what that was. It was a drop shipping. I think it was something like that, but good to see you, Brian. Thank you so much for coming. Okay, well, here is the plan for today. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at all my positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them moving forward. We do have a few trades up from some of you. We're going to take a look at those as well. Then we are going to do a few minutes on trader psychology. I mention this each day, but in my opinion, being able to be disciplined, creating a plan, following your plan, that's the greatest skill you can have in trading. It is important to learn technicals and entries and exits to be able to formulate a plan, but to stick to a plan is a whole different thing. It's just like wanting to lose weight. We all know how to lose weight, but it's hard to do, right? It's kind of hard to do. We know we should exercise more, eat better food. We know exactly the perfect plan, but maybe our discipline's not there and we can't stick to it. Well, it's the same thing with trading, right? Trading is about risk to reward. It's about entering positions as close to you can as the support underneath you, so that if you're wrong small, and if you're right, you have the possibility of being right big. Position size correctly, following your plan. That's it. that's the secret. There's no holy grail to trading, but that's the secret of trading. Position sizing correctly, buying as close as you can to your stop underneath you. So if you're wrong the smallest amount, and then having the patience and courage to hold on to your trade to the upside as well. So that is the plan, but easier said than done. So that's why I do like to talk about trading psychology. I like to talk about some good trading words of wisdom, so that you hear it each day, and hopefully you will internalize it, and it will just become part of you, right? But if you're having problems following your plan, you need to work on that. That's the skill that you need to develop further. And one of the best ways to do that, everyone, is just position size smaller, because the larger the position size you have, the more amplified your emotions become. And it's pretty easy. Just if the stereo is too loud, just turn down the volume a little bit. And in regards to trading, just reduce your position size. It's the same thing. So we're going to talk about that. Then we're going to come back. There's quite a few different interesting charts to look at today. So we're going to go down through my watch list one by one. We're going to analyze them. We'll see if we can get a few candidates at the end of the day. I'll go through them with a little finer tooth comb, try to narrow them down to like the best one. And, when I look to enter a trade, I have 3 criteria. First criteria is that I want to make sure I see a confluence or a combination of indicators, such as RSI, MACD, moving averages, ATR channels. I look at each group I look at each indicator as a potential group of buyers. So you're going to put yourself in a much better position, increase your odds dramatically to have a profitable trade if you're in the company with as many other groups as possible. So if one indicator represents one group of buyers and another indicator represents another group of buyers, and you bring them together, then you have multiple groups of buyers coming in at the same time. And like I say, to increase your chance of having a profitable trade, be with the most buyers as possible. So look for the most combination or confluence of indicators. Step 2, you have to have a good risk to reward. You can have some great confluences or combinations of indicators lining up, but it may have happened at a point to where it's already made its move, or most of its move, and then your risk to reward is not good. Remember what I talked earlier about risk to reward is very important. So I have to make sure that I have at least 2 times the upside compared to the downside. So if I'm risking $100, I want to be able to make sure I can make 200 or more based upon valid resistance above me compared to valid support below me. And then third, very, very important right now, honestly, it's probably the most important thing right now, is correlation and account heat. A correlation is having too many stocks in the same industry, because they're usually going to go up and down together. You want to be diversified as much as you can. I don't want 4 tech stocks. I don't want 4 healthcare stocks. I want maybe 1 healthcare stock. I may one healthcare stock, maybe 1 auto stock, maybe gold, right? So it's very important. I have a rule that I can only take 1 particular trade per day in any one industry. I can only buy 1 tech stock per day, but I can have 2 tech stocks total, but not on the same day. Right. And very important rule for me that I have followed for a long time, since learning it from Steve Burns. I never, ever, ever put more than 60% of my capital at risk in any, in combined with all of my trades. I just never do it. And it doesn't mean I have to have 6. That's just the maximum that I can have. So that's account heat. So make sure you have diversification in the type of stocks you own, and make sure all those stocks together don't take up your whole account. You want some cash. You want some cash on the side. I mean, that simple rule there has saved me tens of thousands of dollars this year. Just that one simple rule, right? So anyway, we're going to go through. Those are the 3 criteria. There are a few candidates. We'll go through. We'll mark them down. And then I'll try to go through them with a fine-tooth comb and then narrow it down to the best. Then after that, if I do narrow it down, I'll make a trade at the end of the day. Then after the market closes, if anybody has any questions whatsoever, please let me know. If there's anything I discussed today that you're not sure of and you need clarification, please let me know. If you'd like me to take a look at any particular stock symbols, I'm happy to do that. And then if there are any particular stock symbols that you think would be helpful for the group and you'd like my opinion on before the market closes, just go ahead, put them in the chat, put a star by them so that I know it's time sensitive, and I will do my very best to get to them before the market closes. So, all right, that is the plan. Not too bad, right? So anyway, hold tight. I'm going to run the U.S. legal disclaimer, take a breather, and I will be back in about 40 seconds. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, thank you for holding through that with me. Hey, Bob is here. Good to see you. Appreciate you being here. Hello to you. Miko25, great session, Greg. Thank you. I thought you did really well. It was a pleasure, and I'm looking forward to our next one. Joe Turner. All right. I think this is a poem, one of Joe's famous poems. So I'm always excited for this. Joe says, music played in 2008, which came from a harp, October the 3rd. Oh. Music played in 2008, which came from a harp, October the 3rd. They bailed out the market with a bill that we called TARP. We're back in the dumps, and just like back then, it's time for Congress to do it again. Sometimes, Joe, I don't know if it's a poem or you're saying, or you're just mentioning something. Music played in 2008, which came from a harp, October the 3rd. They bailed the market out with the bill that we called TARP. We're back in the dumps, and just like back then, it's time for Congress to do it again. I can't make out, I can't really honestly make out if that's a poem or not. Is it rhyming? I'm not sure. Now I feel bad, Joe. Music playing, where they came from harp. Harp. We're back in the dumps just like that. It's time for Congress to do it again. That might just be a statement. Set me straight on that, Joe. Sorry. Brian says, yeah, it was drop shipping, but my business is on pause currently because of everything took a huge hit because of the virus, so I'm working on my stock skills. Good. Deanne, hello, Deanne. Always nice to see you. She says it's raining in Kansas today. It is raining here as well. Appreciate you being here, Deanne. Mount Doji, so many gap ups today. Makes me hesitant. I agree, sir. I totally agree. Ramble Ron says, don't think there should be any bailout. Sorry. Okay, I have my little notebook here, and I'm putting Ron down for a no on the bailouts. Burke, how you doing, sir? Appreciate you being here. I think this is the first time I've seen you. So hello from Turkey. Hello from the United States. Appreciate you being here. Thank you so much, and let me know if you have any questions. All right, well, let's get to it. Kind of a busy day here. I have made a couple trades. I have made some changes on a couple things. Let's start out here with Walt Disney. I do have a put. I sold puts on Walt Disney down to $50. Currently, we're at $97.02. So I have about 50% protection to the downside. This contract expires January 15th of 21. If the price stays above $50 by January 1st, 2015, January 15th, 2015, I will be able to keep all the premium, which is $375 per contract. When volatility picks up, the prices of puts go way up. The premium on puts go way up. So I was able to sell this here with about 50% protection to the downside, and also about, I think this one was about a 9% annualized return, which is very, very good. So this one is nicely in the money. Really happy for that. This one I'm keeping. If it does get down to $50, I will be required to buy it down there. The reason I pick $50, if you look here on the yearly chart, $50 is right in the middle, the midpoint of the value zone. If we go to the quarterly chart, the $50 has support at the -3rd ATR channel and the 100 quarter moving average channel below. So that could act as support. That's what I'm looking at. That was my theory. And then down here on the monthly chart, we have support of the 200 month moving average and the 250. But anyway, so far, really nice trade on this. It's been very profitable the last couple days because of the reduction in volatility, which is good for puts. So this one is good. This one's good. Currently right now, got almost about 20% of the premium that I will get in about 10 days compared to, so that's pretty good, right? So I am keeping this one. The Qs, I also did sell puts on the Qs down to $130. Currently it's $182.62, giving me about 28% to the downside. This expires in June of this year, June 30th, 2020. I picked the $130 level because we had support at the 10-year moving average. On the quarter, we had the support of the -1 ATR channel. On the monthly, we had the -3rd ATR channel. And on the weekly, if we go down there, oh no, this one was a yearly, quarterly, monthly one. But anyway, really good premium on this one as well, especially for an index. So this one is up nicely. I am keeping this. The SPY trade. All right, world famous SPY trade. In case we have some new viewers today, I do want them to understand why I do this every day, but I do buy the SPY every day at the close and I sell it first thing the next morning. This is has nothing to do with technicals or resistance levels, anything like this. This is all to do with a long-term back-tested approach from Lizanne Saunders. She's at Bespoke Invest on Twitter. She's the Chief Financial Officer of Charles Schwab. This backtest tested two approaches. First, and from 1993, first approach was buying the SPY every day at the open in the morning, selling at afternoon at the close. So if you bought the open, sold the close, bought the open, sold the close. For all your troubles since 1993, you'd return a negative 13.9% return. However, if you did the opposite and bought the SPY at the close each day, sold it first thing the next morning, so holding it overnight, and if you did this every day since 1993, you'd have returned a positive 634.2% return. Past performance is no guarantee of future results. You can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. The buy in the afternoon, hold overnight, sell in the morning over time has been very profitable. However, there are ups and downs, right? When you see these on the chart, you don't really feel them. But when you do it in real time, you feel them. You know, like in 2019, I had a very profitable year using this approach. This year's been horrible. Absolutely horrible. But only saving grace here is that I only use a 10% position size on this trade. In normal times, I have switched to only a quarter position size because we're under the 200-day and we have expanded volatility. So anyway, in the long run, this has been shown to work well. In the short run, anything can happen. And so far this year, this approach has been horrible. But I am sticking with it. And luckily today was one of those times where it was a good one. I did buy yesterday here at the morning at $222.95. I sold it this afternoon, or sorry, I bought it at the close at $222.95. I sold it this morning $234.99, almost $235. So that was a really nice overnight trade. I'm very happy for that. Again, it was only a quarter position because we're under the 200-day and because of the expanded volatility. We'll be buying that again today. Okay, Exxon. I did sell, this is a yearly chart. I did sell Exxon down here, puts on Exxon down to $25. I just heard a rumbling. I hope that's not another earthquake. Oh my gosh. As you know, we've had earthquakes here in Utah quite a bit. lately. But I did sell it here to $25 on the yearly chart. This is at the 50-year moving average. On the quarterly, had the 200 quarter underneath me at the $25 mark. This has about 26% protection to the downside. What I did, I went ahead and covered this trade today for a very, very small loss, a 25-cent loss on these options. This one has been concerning me. You've probably heard it in my voice. And I thought I would use the rally here today to get out of that. Like I said, very close to break even. So, you know, sometimes you make a decision and it feels good, but then you think about it, contemplate it, and I decided I didn't like it. So a break-even trade, totally fine with me. So I am taking Exxon off of the board. All right, MasterCard. So I did buy calls on MasterCard. No, I did not sell puts. I bought calls on MasterCard expiring January 15th, 2021. So about 9 months from now, this expires. When you buy calls, it's a defined risk, meaning that I can only lose what I put up for premium. You know, this has kind of been my approach lately, is selling puts, buying calls on just some of the best companies out there, best balance sheets, lots of cash, companies that will be able to make it through this. I think it's most important right now that we have time on our side to get through the situation that we're going through. And MasterCard was one of the ones that made sense to me. So anyway, so far so good. They're 230 calls. Right now we're at 236.98, meaning that they are considered in the money calls. So anyway, glad I have Microsoft. I feel or Microsoft, MasterCard. I feel good about this, but we shall see. Apple. All right, Apple, I have two things going. I have puts on Apple down to $170, pays $1,380 per contract, expires 1/15/21. The reason I took the, I decided on the $170 level is I like to see a confluence of support at multiple time frames. I did sell 170s here on the yearly because of the third ATR channel underneath, possibly acting as support. On the quarter, I sold the 170s at the 20 quarter moving average. On the monthly, the 170 lines up with the 50 month moving average, and on the weekly, the 200-day 200 week acts as support. So like I said, I got $1,380 per contract, expiring 1/15/21. Today was such a big day up, and the volatility went down and the price was up so huge on Apple that I had already made approximately 30% of the premium that I was going to make for holding it another 9 months. So I decided to go ahead, just lock in profits. It was a really nice, profitable trade. Very glad that I took it. So I did take off the puts. I am flat on puts on Apple, but I did buy 250, not today, but a few days ago, I bought calls on Apple. So I still have exposure to Apple with the defined risk, $250. We're at $243.58. So they're considered out of the money. But if we can get through this, you know, I would not be surprised by the end of the year. These could possibly be worth 3, 4, 5 times what they're worth right now. And if I'm wrong, I only have the defined risk. Okay. So, and then as you know, on IWM, bought puts, which is a bearish move, not for me, but for account, back up here at the 150 level, did cover about 80% of those today. So that was a really good trade. Okay. Now, I did have one day trade today. Did not work out, but it's a great representation of a good return to value trade, and I'm sure a lot of my students will be able to understand this. This is a 5-minute chart here on Teladoc. We were above the 1 ATR channel, but then we came back into the value zone. We started to move sideways. We had a beautiful V1. Here's day one, here's day two. Day two washed out day one, closed above day one's close in the value zone. Perfect setup. Above the value zone, into the value zone, sideways movement, quick reaction down, reversal back up. Bought it here at 168.30. My stop was a halfway of the washout bar. 15 minutes later, came down on me. I had to get out for a loss at 166.27. So it was about a $2 loss on this trade. I position size very small, but I wanted to show you this because even though this particular trade did not work out, if I took this trade 100 times, I'd be very confident I would win somewhere between 65 and 70 times. It's just like a blackjack dealer. He doesn't win every hand, but he's pretty confident the more he deals, the more he's going to win on average. And this is how I felt about this particular setup. Again, above the value zone, come into the value zone, small bars, moving sideways, spike down, reversal up. Didn't work out, but I guess the point here is it's important to take your losses, right? I sold it here at 165.27. It was a bummer. But now look what's happened to it. Now it's at 159.27. So, you know, if I would have decided not to get out and hold on, I would have lost another $6 on this. So just a good setup showing you a perfect return to value with the V1 entry that didn't work out, but then how, you know, that was a key point. By losing that point, now we've gone down more. So I think that is it. Oh, no. Let's see here. Let me get rid of my entries and exits. And Steve Burns did buy this. Boy, it was up great after hours. Steve Burns did buy this yesterday near the close when we had this nice move above the previous day's high and breakout, by the way. Moved up nicely earlier, came back down. It was a wild day. I mean, it went way down, then it recovered all the way back. Now it's down a little bit. But anyway, I'm not exactly sure what Steve's stop is going to be on this. Oh, there's Steve. So anyway, boy, when I saw this yesterday, I was very excited for Steve because after hours it was up like 7%, but it's come back a little bit since then. Bing He, darn it. Bing He had a really beautiful short the other day, yesterday. I can't remember. Bank of Hawaii, I believe it was, that I think he made 12% on. He went short here yesterday at 94.10. But did run into this rally today. So I hope, Bing He, you have a plan on that one. And then Cisco, same thing, took a short here, 35.35, and just ran into a monster today. So I'll tell you, it's tough. It's tough to trade to the long side. It is tough to trade to the downside. Okay. Joe says, it's a poem. YouTube only allows 200 characters, so commas were eliminated. Oh, maybe that's why I was having a hard time. All right, I'm going to take another crack at that. Music played in 2008, which came from a harp, October the 3rd. They bailed the market out with the bill that we call TARP. We're back in the dumps, and just like back then, it's time for Congress to do it again. Okay, there's the rhyme. Thank you, Joe. Appreciate that. I'm going to post that. Let me put here in my little... Okay. Okay, Steve is here. Good to see you, Steve. Always an honor and privilege to have you here, my friend. Always appreciate it. I know everyone else does, to be able to be in a chat, you know, with someone of the stature of Steve Burns and all of his books and websites and everything he does, everything he's taught me. He's been a coach and mentor of mine for years. So always great to have you here, Steve. Congratulations on your put options, Greg. Rally day for the ages. Boy, I would say. And I'll tell you what, it felt good to get out of those puts. It did feel good to get out of those puts. I feel a little better just with the defined risk on the calls, and I do actually feel okay with Disney. Steve says, could be telling that VIX did not drop much today on this rally. Yeah, I was noticing that. Let's take a look over here. If we look at the VIX index, here's the thing, right? I mean, the market is up 9.72% on the Dow, 7% on the NASDAQ. VIX is only down 3%, which is a little concerning. I mean, we did go down before. That might be part of the reasons. But, you know, my students would understand, look, we're way above the value zone. Now we're coming back into the value zone. So I would not be surprised to see a bounce in the value zone, just like I'm not surprised to see a bounce of any stock that comes down into the value zone, like TDOC on that trade. It was a losing trade, but it was above the value zone, came back in, and you know that is why I took the trade. But yes, I mean, look, the VIX was extremely overbought. Now it's coming back into the value zone. So that is actually one of the reasons why, taking a look at that, it pushed me over the edge as far as getting out of the puts. Deanne, Greg, where did you acquire your options trading education? A lot of different places. Steve Burns has a great book, Options 101. You can get that on Amazon. I think that is a great book to read. I've done a lot of study on my own. I've studied with Steve one-on-one with options. Options are fascinating. Joe says, music played in 2008, which came from a harp. October the 3rd, they bailed out the market with a little bill that we call TARP. Okay. That one I understand better. Thank you, Joe. Always appreciate that, my friend. Joe says, we're back in the dumps, and just like back then, it's time for Congress to do it again. All right. I'm going to cobble that together so I can post that on Twitter in its full form. I have just butchered Joe's poems today, buddy. Sorry. Oh, Frank has one. Back-to-back poems. A rap. Buying into weakness, selling into strength, trying not to chase, ain't no race, backup plans just in case. So off the high, can't recognize the spy, selling puts for a cushion if you're trading until you'll be pushing. Look, I don't know what other podcasts you can come to and get poems and raps, but this is it. Buying into weakness, selling into strength, trying not to chase, ain't no race. Backup plans just in case, so off the high, can't recognize the spy. Selling puts for a cushion, if you're trading, you'll be pushing. So good, Frank. Thank you so much, sir. These are the best. You don't get this on the Joe Rogan podcast, telling you that. I love the Joe Rogan podcast, actually. Okay, so that's that. So listen, this is the time of the day that I do like to talk about trader psychology. Before we get to my watch list, before we get to some potential end of day trades for me, I do like to talk about trader psychology, the importance of them, of it. It's a skill, just like learning how to trade is a skill, but creating your plan, following your plan is a skill. Again, if you have a hard time following your plan, you need to make some adjustments. You need to work on that skill of discipline. And in my opinion, best way, reduce your position size. That will turn down the amplifications on your emotions, and you will be more likely to follow your plan. And the more you follow the plan, the better chance you have to make money. There are some great there's some great Facebook and Twitter channels out there. One of my favorites is Stephen Goldstein at AlphaMind101 on Twitter. He also hosts the AlphaMind podcast, which is fantastic. He interviews traders all around the world. He was a professional trader, retired. He is now a professional trading coach. This is pretty short and sweet, but it does say a lot. Two, three little word phrases you may want to acquaint yourself with if you really want to succeed in trading. right? 2, 3 little word phrases you may want to acquaint yourself with if you really want to succeed in trading. Number 1, I don't know. And number 2, I was wrong. If you struggle with these, it may be a sign your ego is in control of your trading. Take it from me, I've been wrong enough to know. It's so true. Everyone, we don't know, and we're going to be wrong a lot. Just own it. Somebody says, what do you think the market's going to do? I don't know. I honestly don't know. How would I, just as one individual person without any inside information, know how millions and millions of traders are going to respond in the future? It's an unknown event, so we really never know, right? And I was wrong. If you're wrong on a trade, don't blame it on because you heard something on CNBC or, the cat walked over your keyboard. I've heard that one a lot, to be honest with you, over the years. You're going to be wrong. You're going to be wrong a lot. Hopefully you're just wrong small. But if you struggle with these, it may be a sign your ego is in control of your trading. Trading is so much more than just trading. Most people who don't understand trading just think it's, buying and selling and gunslinging. It is like a Zen process of being in control of your emotions and yourself and physically, emotionally, spiritually, everything, right? That's why trading is actually can improve a person in so many different ways. But if you're struggling with, I don't know, and I was wrong, you may have to work on that ego a little bit. If you have an ego in trading, you're toast over the long run, I promise you. So take it from Steve. He's been wrong enough to know, and he has the experience. So thank you, Steve Goldstein. And again, AlphaMind at AlphaMind101 on Twitter, and also the AlphaMind podcast, which is fantastic. And you can find that there on Steven's Twitter channel. So, okay. Thank you for that, Steve. Zach says, amen to that. Glenn, hey buddy, how you doing? Hey Greg, last time Congress announced a package in 2008, the market sold off. Watch for possible sell-off with unemployment figures on Thursday. Bounce target 2550 to 2700 level. Yeah, I wouldn't be surprised either, Glenn. That is why I did take some exposure off today. That's why I took off the Exxon puts. And that's why I took off the Apple puts. Steve says, all I had was TDOC today with mixed results back and forth. Yeah, that was a crazy trade, Steve. I saw that up and down and up and down. Airlines went crazy today. Yes, they did. Mount Doji. Thanks for the kind words, Greg. Thank you, sir, for everything you do. American Airlines and JetBlue up 30+%. Glenn says, Italy, Germany, France, and UK all posted more new corona cases today compared to yesterday. Yeah. Christopher says, I am wrong more than I am right. Ironically, you can be wrong more than you're right in trading, Chris, and still be positive. It's just, be wrong a lot with small losses and be right big with a few gains, few wins. Frank says, I day traded NLOK in at 1740, out at 1779. Congratulations. NKOL. NKOL. I guess I don't have that one. Oh, NLOK. Dyslexic, everybody. Nice. Win's a win, right? Can you talk very fast? I can't catch you. Haha, I'm joking. I know, I do speak fast today, right? I think just because there's a lot to get through. Christopher says, how's Corona in the United States? Yeah, it's growing. I think we have the third largest numbers in the world, I believe. Yeah, it's crazy. It's crazy, crazy stuff. So, all right, Burke, I hope you can keep up with me. If you can't, just let me know and I'll repeat something. Christopher said, it's bad here. They estimate hospitals will be full by weekend. Yeah. Yep. All right, let me take a little look-see over here. Wow, what a day. I have been very fortunate. Yesterday was a really nice up day because of my puts, even though the market was down mainly. So I was very fortunate for that. This morning when I turned on my computer, I was not expecting But boy, the volatility went out of those puts, and with the prices going up, yeah, it all really helped. So I'm grateful for that because I've had a whooping more than I've had winnings in this last month, which I'm sure you know. But I'm happy for any little bit back. Glenn says USA Corona cases 51,373, catching up fast to Italy 69,176. Wow. All right, let's go through here. Take a look. See Apple. Apple's had a nice bounce off of the negative third ATR channel. It does have the 200-day above us. It did go under the 250 and over the 250. And Miko 25, if you're out there, we talked about this yesterday with, yes, it went under the 250, over the 250, still has the 200 above it. So to me, it's a little bit in purgatory. The under 250, over 250 is a good risk to reward for Apple. It does not have a high winning percentage, but I'm going to pass on this because I already have Apple calls and I don't want double the exposure. Adobe, not up much today, but it is holding the 200-day moving average below, so nothing there. Amazon up, it's up 1.4% today, which seems like it's underperforming the market. It did reject the 50-day moving average above it. So, if I was trading this shorter term using a 50 RSI or a 50-day moving average as my stop, I would have been getting out here. Boeing, huge day today, up 17%. That's really good. Kind of scary to me on Boeing, to be honest with you. Berkshire Hathaway, nice big move, big huge gap, does have a V2, day 1, day 2, day 3, day 2 washes out, day 1, day 3 closes above. This is all good. It's at a 41 RSI. I don't particularly like 41 RSIs, especially with the negative 1 ATR channel above. Has not been able to break above the 10-day, so I'm going to pass on Berkshire. Beyond Meat, nice rally back up here, 38 RSI. I don't see a clear signal. Caterpillar is up today. I don't see anything there. Dow Jones, this is positive. We went under 30, over 30. We have a V2, day 1, day 2, day 3. Day 2 washes out day 1, close back up in the value zone. We also did have a false breakout of this previous low. Like Mount Doji said, the gap concerns me a little bit. At this point, I just don't think it's a good risk to reward up here, to be honest with you. And we have had a lot of volatility, right? I wouldn't be surprised if we had a big down move either. So I'm going to look for something has a little bit better volatility, better risk reward. Of course, the Walt Disney puts I have are doing great today, up 13% today, but no directional trade. Etsy, no. Facebook, nice and strong today, up 8%, but I don't see a good risk to reward there. Gold up probably $75 today. I did have gold back here, but I got stopped out under the 200-day, didn't get back up here, took right off. So any of you have gold, congratulations. Google, I would have bought Google yesterday. I was talking with Miko 25 about this. I like the under 30 or the bounce off the 30 right back up above third ATR channel. False breakout of this previous low. The reason I didn't take it was because I already had exposure with the Qs and with Apple and MasterCard. I just didn't want the added exposure, referencing back to when I talk about account heat. I just didn't want any more account heat, but that would have worked out really well. How are we doing on time? Goldman Sachs back above the third ATR channel. That's the start. Home Depot, big strong day up here today. For my students, I wouldn't buy this high. I'm waiting for it to come into the value zone, looking for a day or 2 or 3 back, and then buying a higher low. IBB, I don't see anything there. Intel did reject the 200-day already to the upside, so not a great sign there. We did have a MACD crossover, which is pretty impressive, but I would be looking for a pullback for a couple days and then look for a higher low V1, V2. And then if that broke above the 200-day, that would be even better. Russell 2000 up about 8% today, back over the third ATR channel. Nothing interesting for me there. Johnson & Johnson, no. CarMax, nice rally here, but we sure came from a big down. You know, anytime you have these big, huge downs, you are going to have these counter trend rallies, but very often they're going to get sold into. So I'm going to leave that one alone. Coca-Cola, no. Lockheed Martin. Lockheed Martin is one of the better ones, honestly. Here's day 1, here's day 2, here's day 3. We bounced off the 30, back above. V2 formation back above. We're only at a 35 RSI. We did have a false breakout of this previous low here. So not a bad risk reward ratio. I will keep that one on the list. MasterCard, of course, I have already in the call, so I'm not going to add a second one there. McDonald's up 16%. McDonald's is one of these ones that I do actually want to buy some longer term calls on, but I want to do it on weakness, not on strength. Merck, nothing there. Microsoft, battling with the 200-day moving average there. Excuse me. But you know, a close over the 200, a strong close, maybe over this high, giving it a fractal. That might be something, but nothing there. Netflix actually down today, V1 to the downside for those of you watching for V1s to the downside, and a rejection of the 50-day moving average, so nothing there. Nike, nice higher low V1 back up in above the 30 ATR channel, but we have earnings after the bell, so I'm not going to mess with that. Philip Morris, not bad, not bad. PayPal, not bad, too high now. Qs, I already had sold puts on the Qs. Silver up almost 8%. So you gold bugs and silver bugs out there, congrats. Great day. SPY, of course, I had the nice overnight SPY trade finally. I did like the sideways movement that we had in the last week. You know, it showed that we stopped going down. That's why when I have return to values, you know, looking for return to value V1s, V2s, I want to see that sideways movement. I want to stop seeing it go down. So not going to buy anything here on SPY, but except for the overnight SPY trade. TDOC, so this one has been all over the place here. Steve, if you have any updates on that one, let me know. Bonds came back up into the value zone, bounced up. I don't see anything on bonds. Tesla up 16%. Very, very nice. Twitter up about 4%. I don't see anything there. United Airlines up 24%. You know, you can look at this and think, oh, I should have bought this. But look, you could have said that the entire way down. It always looks, you know, it always looks very obvious when you look back at the chart, but you could have bought here and got hammered, here and got hammered, here and got hammered, here and got hammered. So keep that in mind. UNG, I don't see anything there. United Healthcare, somewhat interesting. We have a V2, not much of a gap. We have day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1, making that a nice V2. We actually went under the negative third, over the third, and we also washed out this previous low. So I'm going to keep that one as a potential. Here's VIX, again, way above the value zone, coming back into the value. You know, I would expect possibly a bounce here, right? It was above value. It's come back into value. Very often it will come back into value before it heads back up. So nothing there. Walmart down today, interesting, but we were above the 1 ATR channel. We came back into the value zone. We've had a couple days of sideways movement. So if I got a V1 or a V2 going forward, that would be a perfect return to value V1 or V2 entry. So it's met all the criteria. It's just doesn't have the trigger yet. XLE, interesting with XLE here, we have the 5-day moving average. You see how long it's been since we've closed above the 5-day moving average? It's been forever, months. And here, we're above the 5-day moving average. Is that enough for me to enter the trade? Probably not. It's still not over a 30 RSI. Imagine it's going to have resistance at the 30 RSI and the negative third ATR channel, so I'm going to let that one go. XLF looks pretty interesting to me. Here we have a V2, day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes, looks like it's going to close above day 1, making it a V2, closing above the 5-day, closing above the negative third ATR channel, having a false breakout from this previous low here, and going under 30, over 30. This is my favorite one today. Now, it's under the 200-day moving average, and volatility is huge. So normally under the 200-day moving average, I would take a half position, but because of the increased volatility, I'm only going to take a quarter position. I like the setup. I'm concerned about the volatility. I don't want to let the setup pass me by because I do like it. XLRE, look, we're Miko 25 and I were talking about this. Look, here's a nice V2 under 30, over 30. Look at real estate. Okay, under 30, over 30, V2, but which one's stronger? Real estate is still under the negative third ATR channel. Financials are above. See, so that is how I would, use a report card to pick XLF over XLRE. And healthcare. Healthcare's RSI is 3779. Financials 3680. I'll probably go with the one with a little bit of lower RSI. And what I really like is I like this coming down, moving sideways, 1 day down, reversal back up. My stop would basically be a close below the 30 RSI or the halfway of this washout bar. So again, this looks the best to me right here for me personally. Lockheed Martin looks okay as well. Let's look over here on the weekly as Lockheed Martin still has that 100-week moving average above it. On the finance, we still have more room, in my opinion, to get up there. So I am going to stick with the plan here of taking a quarter position of XLF and just keeping it simple. Okay, so that's what my plan is. I'm going to buy a quarter position of XLF at the end of the day. Christopher says, do you think this is a temporary rebound? I'm not sure if Chris, if you're asking me or Glenn. Glenn, if you have any thoughts, but it certainly could be, as we haven't seen the back of the coronavirus. Yep. Burrick, I hope USA index will be good because you affect our country indexes. Yeah, I imagine we do. Christopher says, yes, typical dead cat bounce. News is only going to get worse the next 2-3 weeks. Peak expected around Easter in Europe and USA in late April. One thing, let's take a look here at the indexes and let's look at the volume. I was talking about yesterday on these up moves, on these big bear market rallies. We want to see a lot of volume. I don't see a ton of volume here. Right? I don't see a ton of volume. So that kind of dovetails with what Glenn said. Hi, Greg. Cut loss for Cat and Cisco. Took TDOC at 168. Yeah, I saw that being when I saw that, I was like kind of bummed out. I know. Joe said, but it's good to see you being he. Thank you for coming. Joe said, I'm thinking a short on an airline in my near future. Okay, let us know if you do something. Without government bailout, this market is toast. I would totally agree with that. Ramble says they are just going to use for buybacks and pay themselves. I guess we'll see, right, Ron? For sure. Back to work. Thanks, Ron. Appreciate you being here. Steve says, looks like I'm holding TDOC here unless it plunges in the next 10 minutes. Okay. Well, let us know if there's any update on that, Steve. Burke says, hi, Steve Burns. I follow you on Twitter. You share so good. Yes, he does. You, Greg. Yeah. I'm concerned. I'm concerned about the volume not being super strong on this rally. I'm concerned that everyone was looking forward to this deal. I think it's kind of baked in the cake, and still we're in a bear market. We're in a bear market, and these kind of rallies happen. But again, that's why I took off my Apple puts. That's why I took off my SPY puts, not SPY puts, but my Exxon puts. So yeah, I wouldn't be surprised either way, but if you look at the charts only, lower lows, bear markets, yeah, they tend to rally. They tend to have bounces, but it doesn't mean it's the bottom. Okay. So, as I mentioned, looks like we're buying into the close here. So as I mentioned, I am going to take a position in XLF. I do like the V2. I do like the under 30, over 30. I do like the over the 5-day. I do like over the negative third ATR channel. And I really like this base and this false breakout to the downside. So we have about 5 minutes. Again, this is only a quarter position. I will be looking, my initial profit target will be a 50-day, 50 RSI rejection, or a 50-day rejection, or a rejection of the 200-day moving average. Or if it moves more than one ATR for my entry, I will implement a trailing stop with the close below the previous day's low. So pretty simple, right? It's a trade plan. I know exactly what I'm doing, whether it's going up or going down, and that's what's very important. Okay. Well, let me get this chambered up here. Let me make sure that's the right amount. Yes, it is. So small position, quarter position, but I try not to get into the habit of, like when I talked about before, I don't know, right? This could go on up, but it offers a good risk reward ratio. I like the pattern. I like the setup. I don't want to get into the habit of I'm taking trades or I'm not taking trades just based upon how I feel. If I have a valid trade, I'm going to go ahead and take it. All right, we have 4 minutes. I think I'm just going to go here, get this in. Okay. Dr. Jorgen says, good hike, off on the bike, into the sunshine on a nice warm day here in the desert. That sounds like a plan, Bruce. Thank you for coming by. As always, bud, I will speak to you later tonight. Okay. Bing He says TDOC has a trumpet chart pattern or a megaphone chart pattern from 27 February to yesterday. Oh yeah, with the ups and the down. Yep. Well, everything's rallying strong into the close for sure. Interesting times. Interesting times for sure. All right, where did I get filled on old XLF? I got filled at 1987. And then here when the market closes, I have the little overnight SPY trade, also a quarter position. And we'll see what happens. Maybe a little touch of selling here at the end, who knows? All right, so about 30 seconds. Dan, consider using website called Free Stock Charts for upcoming training. It allows paper trading options. They merge with TC2000. Oh, interesting. Free Stock Charts. All All right, I'm writing it down, Dan, so I can take a look. Thank you for that. Okay, so that's that. And the SPY came in at 243.15 for the overnight trade. All right. So XLF got in at 1987. 1987. All right. Again, initial profit target 50 RSI or the 50-day moving average, whichever one comes first. If it moves more than 1 ATR for my entry, I will get out with the close below the previous day's low. Stop will be halfway the washout bar or the 30 RSI, whichever is closer. SPY trade. Man, that was nice to have that overnight SPY trade finally. 243.15. And I will sell that first thing tomorrow morning. So wonderful day, actually, perfect day, biggest day I've had this year. So I'm very, very grateful for that. Listen, if you have any other questions, want me to take a look at something, you want to discuss something, let me know. Just a couple things I want to get out of the way. First, I've had this issue with YouTube where it's not sharing the screen. It's not sharing the podcast. If you have the direct link or you go right to my channel, then you can get to it. But it's really kind of a bummer. I'm not sure if I did anything wrong, if I shared something I wasn't supposed to, or if it's because Google is letting their AI look at things and approve things instead of their humans because they're home because of the virus. I'm not sure. But in any case, if you would be so kind, if you have some trading friends or someone that's interested in trading, I would really appreciate it, especially right now without the sharing from YouTube. If you might tell somebody about the channel or share it with your friends or share it on social media, any little bit would help. And if you could do that, I would really appreciate it because it's kind of a bummer with this YouTube, but hopefully we'll get it worked out, hopefully, but I never know, right? And then secondly, just want to put in my quick daily plug and let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I really love to teach. I really look forward to every new client that I get. I've been trading for 24 years. I've studied with some great traders, great authors, well-known people like Stephen Burns and Dr. Alexander Elder and Kerry Lavorne and Larry Williams. And I do teach a course. It's 5 sessions, each session somewhere between 2 and 3 hours, just depending how long you can stay up, and keep attentive, but they're almost always 3 hours, right? And I teach you everything I've learned over the years. I teach you everything I've learned from my teachers and mentors like Steve and like Dr. Alexander Elder and Kerry Lavorne, Larry Williams. And I think it's a great course. It's $1,000, but I think it is worth every penny. The format of the course is the first half of each lesson I teach you. The second half, I start asking you questions. I start having you break down charts. We go through all sorts of different market conditions. We see lots of winning trades, lots of losing trades. But when you're done with this course, you should be able to approach the market regardless of what it's doing and have a tool and have a trade that you can use. So like I said, it's very interactive. Come ready to learn. I do tape all the lessons so that you can watch them after. But if you're interested, reach out to me. It starts with the free Skype call, and there's no obligation and there's no pressure on my end whatsoever. I only have so much time to do these lessons, so I really want to do them with students that really want to learn and are committed. So if you want to set up the free Skype call, I just want to get to know you better. You can get to know me better. I want to learn about your trading and what your goals are and what your frustrations have been and your challenges are, and then you can ask me any questions about mine, right? And if we feel like it's a good fit, then we'll just go ahead and we'll schedule the lesson. I'm pretty booked up right now, but out a week, maybe 10 days, we could schedule the the lesson, you know, if we feel like we're a good fit for each other. So if you're interested, reach out to me. My email's in the description of this video, and then also you can send me a message on Twitter. Boom. So that's it. Thanks for hanging through that with me. I do appreciate it. And let's take a look here. Frank says, this is a verify, but don't trust market. Yeah, of course. I mean, we're all very leery of this market. I mean, it's been whipsaw, right, Frank? I mean, you know, it's gone up. Everybody feels good. It's amazing how optimistic or how pessimistic you are about everything going on, the economy, everything, to, you know, what's going on with what the market does. It's probably not right, but I guess it's just human. But yeah, I mean, you know, I'm in the market here with some small positions, with some defined risk, with some lots of protection on the puts, and I feel pretty good about you know, my portfolio at the moment. But you never know, right? You never know, and so that's why I always get back to position sizing. It's very important. Dan, by the way, 14 thumbs up. Oh, is that good? Wait, I see 18. Oh yeah. And if you like the podcast, if you could hit the thumbs up button, that would also be great. That would also help with YouTube as well. So I don't know why I'm in YouTube jail. I really, really don't. I'd like to get out. If somebody could come bail me out of YouTube jail. Zach, I think I got the notification today, Greg. Oh, that's good. That's a start. That's a start. So what else is on everybody's mind? How's everybody feeling about this market? Anybody have any trades today that they'd like me to put up on the board? Happy to do it. You know, you always hear about me blabbing about what I'm doing and blah, blah, blah. But, you know, be good to hear your thoughts, and be good to hear a little bit about your trades as well. Today was the best day since 1933. Wow. Well, that's another reason why I felt pretty good taking some of those positions off. You don't get days like this all the time, right? Okay. What do we have? Apple's down after hours. Disney is down a little after hours. MasterCard's down after hours. Q's up just a skosh. S&P's up $1.50. That's good. And XLF is up 5 cents. Kamal says, out of all my longs today, just sold MasterCard 2022s before close. Yep. So Kamal and I have kind of the same feeling on some of these long-term options, although Kamal did sell his today before the close. And I'll tell you what, for those of you that don't trade options, it is sometimes really difficult to get out of long-term options because the bid and the ask spread is so wide. You can get out of them anytime you want, but you're going to pay the price for it. So you kind of have to get in there and put a mid price in, try to get filled between the spreads. And like I said, for those of you that don't trade them, you don't understand this pain. Kamal probably spent an hour trying to get out of his options at a decent price, I imagine, right, Kamal? Brian, can you take a look at steel for me? I'm just curious about it. Do you have a symbol for me, Brian? I don't know if I have. Well, here, I can do it this way, maybe. Let's see. Oh, that didn't work. That didn't work either. STEEL. There's National Ski. Okay, here's an ETF for steel. Can you see that, Bri? Similar pattern to a lot of things today. One thing I would notice, it did go under 30, over 30, which is good. It went under the 5-day moving average and closed over. That is good. On the negative side, we didn't make it above the negative third ATR channel or the 10-day moving average. So that to me would be somewhat kind of neutral. There's some pluses and some minuses. I would sure like it if it got over the negative third ATR channel, but if it does, then the RSIs might be a little high. See, so it's always kind of tough. You want it to go up a little bit more, but then sometimes when it goes up a little bit more, then that messes with your risk to reward. So, you know, that's why sometimes it's hard to get a really good trade, but when they come along, you know, you probably want to take them, but they don't come along that often. Oh, X. Oh, United States Steel Corporation. Okay, better. This was the time here, Brian. We went under 30, over 30, under the negative third, over the negative third, right? That gives you a good risk to reward ratio. Now, I wouldn't be chasing it up here. What I would be looking for, look, we closed below the negative 1 ATR channel, which is the green. I would be looking for a rally back into the value zone, then a pullback. And I say this because the people that were lucky enough to buy down here, if it starts to get a little weak, they'll probably sell. It will probably cause the price to go down for a day or two or three. But then if you get a new group of buyer that comes in with the V1 or V2 having a higher low V1 or V2, then it can move easier to the upside because the people that bought here already sold into that down move. I love higher low V1, V2 entries within the value zone. So that's what I would look for. I wouldn't be chasing it here. Being he said, most of the indices have a small base form. Today's bar don't seem to have a decisive breakout from the base. Yeah, so being he's talking, you know, kind of this small little base, right? And again, look at the volume. We went up today, biggest day since 1993. Looks like every day was, even maybe except for this bar, every day had higher volume than this volume. So that's concerning. Let's look at the Qs. See, still under what it was before. SPY under yesterday's. Disney's a little bit higher. MasterCard about even. Apple not quite. I bet if we look at like Cruise Carnival or something, it might have. Yeah, there you go. You know, we did have higher here, but look at this bearish kangaroo tail here, and rejection of the 10-day. It's tough. My really, you know, my unsolicited advice, and I'm not telling you to do this. It's just advice. You know, it's just my opinion of how I look. In this market, be very careful with your position size. Be careful about taking multiple positions in one day. I'd rather stagger in so that if I'm not losing, you know, if I buy 3 positions today, I don't get, you know, slammed all 3 tomorrow. It's better to lose profit from a profitable trade than a complete loss of capital on all 3 trades at the same time. Kamal says about 30 minutes, yes, and it's best to get in on call on downticks and get out of calls on upticks. Yeah, of course. Yep, that makes sense. That makes sense. So just a kind of a quick recap. Disney puts down to $50. I'm feeling a lot better about these now. Q's puts down to $130. So have about 2 months on those. We'll see. I don't know if it's going to be enough protection, but I do like the technicals of where it's at. Of course, we had the overnight SPY trade. Got that there at 243.15. MasterCard. I kept my MasterCard 115.21's 230 calls. Defined risk. Apple, same thing. have, this is June 18th of 2021. So this is a year and 3 months away, right? And defined risk. And then XLF is my only directional trade here that I took with the V2, the under 30, over 30, under the 5 EMA, over the 5 EMA, under the negative third channel, over, and then of course the false breakout. And again, a false breakout, here we come down, we created a little range. Here's the low. Yesterday we tested the low underneath and immediately went back up, and that's that. Kamal says, yesterday these calls were between 20 and 25. Today we got ramped up to 33, and I was able to get out of the 245 January 22s for 38.50. Stimulus or not, the world is shutting down. Credit card swipes are mostly down exponentially. Yep, 100%. 100%. Let me check something over here. Okay, so it looks like Steve did hold his TDOC. All right. And then Bing He, I know, got out of his cat and his Cisco shorts. Yeah. Okay. Wow, what a day. I'll tell you what, I'm really, really glad of having this YouTube channel during this completely volatile time, because these are recorded. I can look back one day, hey, remember back in 2020 with the virus and the market? Oh yeah, I remember here, right? And then I have a whole diary of it. It's pretty great. Okay, well, if anybody has any other questions, please let me know. I'm happy to answer. Or if I can be of help in any possible way, just let me know. Otherwise, I am going to put on my hiking shoes, head on out, go for a hike. And I'm not teaching tonight, so I always like when I'm teaching. I always like to teach at nighttime, because normally I go to the gym, can't go to the gym. So I'll go walk around the mountains for a bunch. And Zach, I'm going to get back to you. I don't know if you have time tonight, but maybe we could schedule something up tonight, and we'll do some option talk. Okay. Well, listen, if you have any other questions, let me know. Otherwise, I just want to leave you with a couple things. Please go out and do something nice for somebody today. In this current environment, maybe it's just calling somebody, doesn't have a lot of friends, maybe somebody that doesn't get out much. Maybe it would be nice for you to give them a call, just check on them. I'm sure they would be happy that you did that. And, you never know what people are going through right now. So, but in general, try to do something nice for somebody every day. Make this world a better place. It's good for them. It's good for you. You could really make a change in their day. So just try to make it, a habit, right? And then 2, if you don't mind, on the way out, if you could hit the thumbs up button, I would really appreciate that. It would help the channel. And number 3, because I'm in YouTube jail, if you, wouldn't mind maybe sharing this with some of your trading friends, or sharing it with some of your friends, or maybe sharing it on social media, that would kind of help the channel right now when it's not being put out there. But I don't know. Brian said he got the notification, so maybe so. One day it was on, then off. One day it was on. So anyway, I hope it gets fixed. I really do. All right. Well, I guess that, let's see. Joe Turner says, hey, take care, Greg. Have a great hike. Thank you, Joe. Appreciate that. Sorry for butchering that poem, but now I think I've got it together. Yeah, Zach, I'll email you. I'll email you and we'll get set up. It'll be fun to be able to speak with Zach in person. Thank you, Kamal. Thanks, everybody. Appreciate it. Have a great day and do something nice and historic day, right? Historic day. So that was fun to spend it with you. So, all right. I'll see you tomorrow, hopefully, during the last hour of the market. Take care now. Thanks, everybody. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.